In this session, we will discuss what is Warren Buffett indicator and how it can be applied to the Indian stock market. Before moving forward, if you're new to this channel, go ahead and hit that subscribe button. This channel is dedicated to providing practical and real life insights for Indian investors and traders. So don't miss all that amazing information. Alright, now let's get into it. Any indicator with Warren Buffett's name associated with it will be taken seriously by the investor community, right? So it's not a surprise that this indicator is used around the world, especially in the developed economies. And India is not far behind. As you can see from these newspaper articles, Buffett indicator is frequently cited by analysts and researchers to make their case about the stock market valuation. So let's start by answering the basic question first. What is Buffett indicator? It's an indicator that Warren Buffett uses to get an overall feel for the valuation of the US stocks, whether they are undervalued or overvalued. And it's pretty easy to calculate. Take the total market capitalization of all the stocks in a country and divide that by country's GDP. For example, in 2018, the total market capitalization of all the stocks listed on the Indian Stock Exchange was around $2.3 trillion. And the real GDP was about $2.6 trillion. So the Buffett indicator for the Indian stock market at the time was 2.3 divided by 2.6, that is 88%. The logic behind the indicator is that the GDP of a country gives us hard, ground level information about the country's economy, whereas the market valuation is very subjective. So, by anchoring the market capitalization to the GDP, we can make an objective assessment whether the valuations are reasonable or not. So, higher the value of Buffett indicator, higher are the chances that the markets are in the overvalued territory. To give you a better sense in the Indian context, this is how the Buffett indicator has looked like from 2007 to 2018. If you notice the two times the indicator spiked over 100, that is in 2007 and 2017, the market saw some significant correction. So it is fair to say that the Buffett indicator gives a pretty decent idea about the market valuations. And no wonder fund managers around the world use this indicator to decide whether to enter or exit the market. However, Buffett indicator has some limitations when it comes to the Indian stock market. First, 15% of India's GDP comes from the agricultural sector, but there are very few companies in the stock market that represent the agricultural output. So in a way, a huge segment of Indian economy is underrepresented in the calculation of this indicator. Second, there are a lot of Indian companies that are successful but have decided to remain private. So these companies are a big part of the GDP but are not accounted for in the market capitalization calculation. And that causes some imbalances in the Buffett indicator. And third, a majority of the small and medium scale industries whose output is counted in GDP are not listed on the stock exchanges and hence their valuations are not accounted for in the Buffett indicator. All this means is that Buffett indicator might be very reliable for Western countries where the primary markets are very well developed. It is still imperfect in developing countries like India. So, what is the bottom line? Should we use Buffett indicators or not? Well, here's my advice. Perfect or not, the logic behind the Buffett indicator is solid and therefore it should not be ignored or dismissed. Second, instead of purely relying on this indicator, if you use it along with other valuation metrics like price to earnings, you will get a much more reliable picture of Indian economy. And third, instead of worrying about the accuracy of the absolute calculation, if you focus on its relative change over a period of time, you will get much better insights. So guys, this is it. That was the crux of the Buffett indicator. Will you use this indicator in your analysis? Let us know in the comment section below. And don't forget to subscribe to the channel for getting all the awesome stock market videos we are working on.